excited to have this conversation with Erik about open money, particularly talking about open financial systems, monetary systems, touching on some of the regulation. It's a sunny Friday afternoon, so we're going to try to make it interesting for you guys. I know the opportunity cost of being out there is high. We'll dive right in with some intros and then talk about some of the exciting trends we've seen in the space. So my name is Rene Reinsberg. I'm one of the founders of Celo. Celo's mission is to create a new open monetary system that creates the conditions for prosperity for all. And I've been, you can call it fortunate to some extent, to experience a lot of different monetary systems throughout my life. I grew up in East Germany, and then the wall came down, and we went through a big transition there. And then about 10 years later, the euro came around. And a few years later, I started my career at Morgan Stanley, working in fixed income capital markets, spending a bunch of time in Eastern Europe, working kind of on hybrid capital, which is kind of the bank capital that banks use to provide stability. And from there, worked in emerging markets. We spent some time with the World Bank in Venezuela, the local office there, and then found my way into tech. And so the last 10 years I've been working in technology. And feel like really fortunate to have been, having all these different experiences that have really been shaping some of the work we're doing now at Celo. And Erik and I, have met. We've been, since starting Celo, we've had some really great engagements, conversations with various teams at the World Bank, and Erik has just been a fantastic thought partner on many fronts. And before we dive in here, I want to also give him a chance to introduce himself and share a bit of his background.
Thank you, Rene, and it's exciting to be here because, in a sense, I'm a bit of the odd person out. This is a very exhilarating place with a lot of founders and VCs, and I'm kind of representing a somewhat old world organization that people might not really are familiar what its objectives are. So I'm really excited about the opportunity to explain some of the work that the World Bank is doing in this space, and how it is seeing the digital economy really as a foundational shift in a broader sense, and it has a corporate mandate around what it's calling disruptive technologies, which is an umbrella term for many different things. Let me kind of illustrate a couple of things to give you an idea. One thing that we're doing is working on a GovTech, which is an approach to enable governments to come online, to be increasingly more responsive and transparent to citizens and voters, and to increase the facility of services and also the amount of services that are online. Another important example is of ID4D, which is basically touching about a very fundamental problem in the developing world, which is most people are not documented. And if you're not documented, you're going to be a part of the formal economy. So as a consequence, many people still reside in the informal economy with all the associated inefficiencies. And we recently also announced a digital economy moonshot for Africa, which basically has the aspiration of getting the continent online by 2030. What I mean by online is citizens, businesses, and governments completely digitally enabled. So the World Bank is really focusing on these things very deeply. Now, let me also remind you, I'm speaking only on my own behalf, so whatever I say is not necessarily representative of the views of the World Bank. Let me put that disclaimer right out there. That's always important. So within the World Bank, it's a big organization. I sit in what is now called the global practice that focuses on finance, competitiveness, and innovation. And in a nutshell, this is about helping financial systems be more stable, and very importantly, be inclusive. And that's really where it links very closely to the theme here today. And you might have seen some of our products, data products. Findex is an important data product that the World Bank puts out there that tracks the level of financial inclusion. We have a universal financial access goal, which basically means that we want to get all people, or as many people as possible, to have a transaction account. Now, why a transaction account? Because it's just only to get a simple balance, but really that's a gateway into a transaction account, is a gateway into a broader set of financial services, and as a result, being part of the formal economy. So we really see financial services as a very important gateway into development. So let me stop here because I have many more things to say, but maybe Rene?
Yeah, and one thing that I think really, when I look at sort of what's happening in the space and kind of your work, you're kind of bridging, two worlds almost, right? On the one hand, it's being very close to the innovation that's happening around sort of the new technologies that people in this room are building, and then on the other hand, spending time with kind of member countries, regulators, and thinking about how to actually put some of that out into the real world in a responsible way. And the Bali FinTech agenda, which I'm sure some of the folks in the room are familiar with, I think is really gives a really great kind of sense for how far we've come in terms of some of the financial inclusion goals and looking at what some of these new technologies can actually enable, and also painting a picture of where the puck is going. And so I want to maybe spend a little bit of time talking about that. I think there's some really relevant applications for folks in the room. And before we talk more specifically about blockchain, which obviously I'm very interested in, I think there's also kind of a wider some of the wider trends that have happened in the space around, I think you call them some of the fundamental infrastructure that's been put in place around broadband internet and mobile technologies. And so, Erik, you as one of the drivers behind that effort, maybe you can share a little bit of the high level, maybe the things that kind of, when you look back at the process, were most surprising or insightful in terms of how far we've come on that front.
So, no, thanks. So you mentioned the Bali FinTech agenda, and I will not presume that you are familiar with this. But it's a joint venture, if you will, between the World Bank and the IMF to really come together and think about emerging lessons and ideas for policymakers to take on board. Now, why is this important? Because many of the client countries that we work in are grappling with the fast-moving pace in the fintech space and find it exciting, but also are a bit anxious about some of the developments. So it's really about, talking about machine learning. I mean, you have your objective function and you want to maximize it. Similar thing is what policymakers are doing. Their objective function is to, of course, maximize the benefits and minimize the risks. So our sister organization, the International Monetary Fund, thinks very closely about stability issues, stability of financial stability, monetary policy stability, international monetary system stability, global financial safety net, and the World Bank is interested in innovation, consumer protection, making sure that we reach that last mile to rural areas where we can really boost financial inclusion. So that's the context. And the Bali FinTech agenda does not presume these lessons are set in stone. Rather, these are elements that are emerging. There are no best practices yet. Policymakers are still thinking very deeply, as I was saying. So there are 4 big buckets where these main lessons, these emerging lessons can be put into. The first one is really to create an enabling environment. What do I mean by an enabling environment? Is to first get the infrastructure in place. That's the digital infrastructure, the broadband, the registries, the mobile networks, the telcos, etc., but also the financial infrastructure, credit registries, movable collateral registries, those type of things, because those are an important part of the financial ecosystem, and without them it cannot function. There's an important part also of literacy, and I think I heard people a couple of times already talking about that today. Many people don't know financial products, don't know how to deal with them, particularly not when it comes online. So there's a financial literacy component that's very important. And that can be part of a national financial inclusion strategy, which many countries these days have a national inclusion strategy. Then there's also about capacity building, because many regulators, when they look at this objection function, they're regulators, they're not technology experts. They're a bit behind the curve. So they want to move ahead of the curve, and that means that you need to build institutional capacity. So that's one bucket. Another bucket has to do with the policy framework. When you think about monitoring the regulatory perimeter, that's a bit of a lingo, but basically it means that many fintechs are excited to operate, but they might not be aware that they're operating outside the regulatory perimeter of what is the regulated system. That might create all kinds of issues for the startup itself, but also for financial stability. So this really needs to be monitored, and that needs to go along with a regulatory stance that is flexible, that is nimble, is willing to learn, is tech neutral, and is proportioned to the underlying risk. So these are two big buckets. There are two other buckets. Maybe we can talk a bit about it later. I don't want to take up too much time. I'm excited about it to share it, but maybe we stop here and we can go.
Yeah, and maybe this is a good time to turn more towards blockchain. And I think the report specifically calls out, the potential benefits that crypto assets, asset tokenization, smart contracts can bring. And so wanted to chat a little bit about that, and I think at Celo we take a full stack approach. So we're building the underlying infrastructure, but then we're also thinking about the application layer. And the idea is to provide everything in an open source way, so that really, if we look kind of market by market, use case by use case, there's the ability to adapt to kind of the local environment, to what's kind of best for the end users. It's interesting because I think we were talking about this earlier. We're here today at the Computer History Museum, and a lot of people, when they look at blockchain these days, they're kind of making comparisons to the early days of the internet. And we were kind of, kind of joking almost like, what in 20 years from now, 50 years from now, where will be sort of the corner for the beginnings of kind of blockchain and cryptocurrencies. And it's fascinating because I think some of the use cases that we're excited about today for people to build on a platform like Celo, like peer-to-peer lending, or kind of small-scale kind of communal insurance, even kind of some of the applications that got around credit history are still tied to the world we have today. And we probably haven't seen some of the really new applications that this technology can bring. And Erik, who's spending a lot of time talking to folks all over the world, innovating in the space, has a really good sense for some of the exciting things that are happening, and also within the World Bank. So yeah, you want to share some of the areas that you're most excited about?
Sure, about blockchain, right? So first of all, let me take a step back. I need to be modest because it is going so fast. So maybe I'm behind, but I think conceptually speaking, it's important to look at two dimensions of blockchain. The one dimension is, and that is actually a continuum, permissionless versus permissioned. So permissionless at the extreme could be Bitcoin. On the other end, it could be a centralized database that uses some consensus mechanism. And on the other hand is whether the asset that is on the blockchain is digitally native or whether it's not. So I think, and in this matrix, this 2x2 matrix, many things are happening. When you look at what is centralized or permissioned, actually the World Bank is active there, because we issued a bond called Bondi in Australia on a blockchain. You might know that the World Bank is active in international capital markets, and it funds itself there, it funds its operation there, and it issued a $110 million Australian dollar bond. And this is very exciting, and this is, I think, one of the first blockchain bond examples. We have a blockchain innovation lab that is also looking at other use cases of blockchain, provenance or supply chains, helping pineapples, for example, along the supply chain, and we're doing proof of concept there, remittances as well. So so the bond is not digitally native, so it needs to also deal with securities regulation. This is very important. And on the other hand, when it comes to you want to say?
Yeah, no, you made this interesting comparison earlier between sort of the intranet and the internet,
yes.
Which I think is kind of a really nice way to think about permission versus unpermissioned chains.
Right. So when you think about the permissionless networks, I mean that's where most of the policy friction lies, but that is also where potentially most of the innovation upside is. And in the permission space, maybe not so much, or more literally, you see some stock exchanges have thought about applying the DLT for settlement and trading purposes, etc. And this seems to be an interesting epsilon innovation. Well, epsilon, it will add efficiency, right? And you can hold assets outright, so it's interesting.
Yeah, and you mentioned kind of identity earlier, and we've been talking about things like self-custody and sort of kind of sovereign identity, which I think is a topic that you and your teams are also thinking about. So maybe kind of looking at some of the use cases that can arise from that, especially as we think about coming back to the Bali fintech agenda, providing better access, easier access to financial services beyond sort of a simple bank account. I think that's kind of where I see a lot of potential. So maybe to kind of make it a bit more concrete, we've talked throughout the day. The topic of credit scores has come up in various contexts, and I think there's this probably well known into this room, but it's kind of a big problem, right? In most parts of the world, it's we don't have very solid credit score systems, and when you introduce digital identity and sort of decentralized identity systems, you're suddenly thinking about kind of new ways to potentially construct something like a credit history credit score, and that can really unleash all kinds of new access to capital and applications. So one area that we're very excited about, and I think that is talked about in the report as well. So yeah, maybe I don't know if you want to add something to that. We have about 10 minutes, but I think that
I'm happy to maybe say something about the risk side of things. I mean, it's important to be aware of that. The report that Rene is referring to are these Bali FinTech agenda elements, and it's called Bali because the agenda was launched during what the IMF and World Bank do every year, the annual meeting. So that was in Bali. So that might have puzzled you, and I hope no longer. But it also talks about some of the risks, and this is very important because when we talk about innovation and adoption and scaling very rapidly, we're super excited about that, but we need to also think about the risks. So what are some of the risks that policymakers are thinking about? The obvious one is, of course, financial stability. If you have a new user or a user that might not be literate, that can create over-indebtedness problems, or your scoring models all of a sudden don't work that well on a new population. I think Sarah was mentioning this morning, it's about data quality. Well, your data set needs to be good, it needs to be representative, it needs to be through the business cycle, so you can estimate your credit score as well, and your non-performing assets that could arise from them as well. So financial stability is an important one. One very, very important one is financial integrity. and that has to do with money laundering and terrorist financing. This is a major one, and keeps policymakers up at night, because when you think about KYC, know your customer, and onboarding, that usually happened in a branch, brick and mortar. You handed over an ID. There was a verification step that was face-to-face. Now you could do e-KYC online that has issues of KML, AML, and KYC, CFT associated with it. Another one is consumer and investor protection. So going back to crypto assets, for example, is your popular cryptocurrency security or not, and how should it be dealt with? These are fundamental issues, and that there's a new class of concerns related to data governance. So who owns the data? Or can you look inside the algorithm, which is a black box, and do you have recourse as a consumer?
I want to jump in on the consumer protections, which I think, especially as we as part of kind of our approach, we do a lot of user research even before we enter into a market, even before we kind of roll out a product. We try to understand kind of what are the current behaviors, use cases, and in the example of self-custody, and suddenly you have this whole new concept of private keys, for example, and what can you do to actually have some of the protections that you have in the current financial system, and bring those to kind of this new world. And I think we're starting to see a lot of really interesting approaches around social recovery, and other ways for not just having people rely on remembering a private key. But I think this is kind of an area where I think we'll see a lot of really interesting research to actually bring some of these protections, so that as someone who's kind of just looking to use this product and is not necessarily going to read an entire white paper, you still have the confidence that the system can work for you. So maybe we have about 5 minutes left, and I want to maybe leave room for 1 or 2 questions from the audience. Erik, any kind of final words in terms of kind of recommendations, beyond sort of blockchain? You look at fintech broadly. We have fintech entrepreneurs in the room from all over the world. Is there what's sort of the best way to engage with whether it's the World Bank or regulators? What's sort of your recommendation there?
So a couple of things. The World Bank Group consists of various arms, and it has one arm. It's called the International Finance Corporation, and it's the for-profit arm, and it makes actual investments in fintech companies, and it has done so for quite some time. So that is one way. Another way is indirectly, because we are helping regulators set up what they call regulatory sandboxes for startups, but also for incumbents to adopt fintech applications in a responsible way that has sufficient safeguards in place. But also we love to engage with entrepreneurs like yourself to learn from the technology, so we are better informed. Because at the end of the day, our client countries come to us. They say, "Can you help us with these type of phenomena in my system?" We need to educate ourselves. So there are various ways. So thank you for raising them. Yeah.